Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to run through Twitter, see what people are talking about. It's going to be financial topics, commodities, wealth building, all of those things. And I'm going to throw and sprinkle my financial opinions all mixed in with it. So if you want to follow me, it's at finding_finance. And if you want to join the website, it's finding-value.com. You can use the word discount in the coupon code. So Jesse Felder says growth stock valuations are inconsistent with surging real yields. I've talked about that a little bit. This is the gigantic disparity between the real rate and where the Nasdaq is trading. Generally, these guys move up and down together. When you get these gigantic gaps between the two, they're going to usually they fill one way or another with time. I think that the Nasdaq's going to go down, and potential real rates could stay steady. I'll say, but lower to steady is kind of my guess or my inclination. So I think the Nasdaq's going to go down. Coming down, the recession is right on track according to today's employment number. Employment is still following the 7 recession average, dated from the time of the first 10-year, 3-month spread inversion in each episode. Peak would come in November. So this person thinks when we get that first yield curve inversion, there's generally a certain amount of time before we'll say that recession is felt, especially by the employment index. So we're going to go up, then we're going to come back, and we'll come back down. And he's saying that November is probably this peak here where we start to head back lower. So we've got another, I don't know, 5, 6, 7, 8 months before that could potentially occur. That's what using the kind of the averages in history. So it's something to look at and something to pay attention to. So coming down, it says U.S. oil demand is starting to fire on all cylinders. U.S. shale oil production is peaking. Speculator positioning is close to record bearish, and SPR release is ending. The oil market is asymmetrically positioned going forward. Asymmetrically positioned to the upside for upside growth versus the downside risk. I would agree with that. Looking at the technicals, we just broken out for oil price. And with this type of risk reward, I find it highly, 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 highly beneficial to be looking for positions in a lot of these energy related sectors. Energy service, natural gas, oil, all of those things. Scrolling, we've got gold. Would love to have a charge into close to give us a daily, weekly high closing. Either way, 1 week closer to the inevitable revaluation, in my opinion. So looking at these charts, we've got gold in the falling wedge that is basically starting to break to the upside. We've got relative strength coming up to the upside. That's positive. CFDs on gold, you can see it's the same thing. And then we've got a larger, bigger picture view. So he's just doing different time frames. We got basically a resistance level. That's what these wicks at the top are here. And that's what we're trying to break out of. We're trying to get above these wicks. We're using it as support at the moment, and then we'll jump and basically launch, hopefully, from the level that we're at, breaking through the 2000 barrier. Scrolling down, the supposed U.S. petroleum superpower is based on shale oil, which suffers a natural decline rate of 45% per year. As Patrick realizes, drilling locations aren't unlimited. What goes up typically comes down in the same fashion. The U.S. oil superpower won't last long. And that's his opinion. It says U.S. conventional and GOM versus tight oil production. So this is the regular conventional and GOM production. We are declining. You can see that we came up and it was kind of slow coming up, and we'll have a slow decline rate. This has been a very steep increase in shale oil, and what is gathered here, what we think might occur, is a steep decline in that production of oil. If that is the case, the majority of new oil came from tight oil, the shale oil in the red there. That would mean that the majority of the world um, is not going to enjoy that oil. So we could go into decline. We could plateau oil production for a while. And with demand increasing, we're going to get a very tight market here. Now, OPEC has cut back production. And this is going to get really tight here, guys. The second OPEC cut hasn't actually taken place yet. Like, it hasn't been felt in the system. We're actually feeling the first cuts that took hold a few weeks ago. Now, the second cuts are going to probably take hold in August or so. So, yes, they'll say, yeah, we're going to cut in July, but that's not felt because things have to basically travel around the world. And then it goes through tankers. It takes 40 to 60 days for tankers and stuff like that. So it might take like a month to kind of get through the system and be felt where we can actually see it in inventory levels. If this occurs at the same time that they're cutting back, we are going to see a dramatic decline in inventory levels, which are really going to jolt, I think, potential oil prices to the upside. Here's XAU priced in dollars. This is gold. Breaking out of the wedge today. Game on when if we confirm that inverted head and shoulders at $1934. So if we can get through 1934, yeah, it's game on. This is from Uselink, and I agree. I think we could see a rally in a whole bunch of things, kind of across the entire board. That even could include the overall stock markets for a period of time. It doesn't have to include it though. I'm not bullish on the overall stock markets in terms of S&P 500, Nasdaq. I think gold, oil, commodities type stuff, and precious metals, they all look pretty solid here. This is GDXJ divided by XOP. He says weekly gap from March just below. Really looking forward to learning the catalyst for all these commodities. Gold and silver making their next leg higher. Just hopefully not an escalation of war. So again, this is GDXJ versus XOP. From 2014, we can see that we outperformed for a while. This portion here from 2018 up, that's the curve uninverting. Or I should say, yeah, it's uninverting. And then at the top in 2020, 2021, it bottomed, and this is the curve inverting all the way back down. You can see that we've broken this downtrend here of GDXJ, and we've come back here recently. The question is the curve going to normalize or uninvert? If it does, then I think GDXJ could very well outperform the oil stocks. It's possible. And we could see some crazy stuff because the valuations of GDXJ in relationship to all these other assets is off the charts stupid cheap. So I'm sitting here looking at all this stuff, trying to figure out where to deploy money, and I'm taking a balanced approach across a bunch of different assets where I think they are the most undervalued. GDXJ and some of those companies are on my radar, and I do own some stakes in those companies. So I'll just say that there. Scrolling down, OIH, which is the energy service companies. Oil service is rocking it. Breakout, retest, resumption. Good signs for oil to go higher. So this is the energy service companies. OIH is the ETF. We've broken this downtrend here, guys. We broke it, we did a retest, and now we're ripping it. So I am extremely bullish on everything energy related and all the energy services. I'm also extremely bullish on precious metals. Extremely bullish on both of those. They work. It basically is a well-rounded portfolio. So when precious metals don't really work as well, like let's say the curve's inverting, you've got all these energy companies just ripping it. And then when the curve uninverts, oil does, or precious metals do incredibly well, and it protects and balances out the portfolio. There is times where they both go up at the same time. So we could be in that type of era where they both go up at the same time. It sure looks to me like that could potentially be the case, but I also think it balances out the portfolio quite well. But energy service, yeah, it looks fantastic. It says, gotta love the timing of these headlines. Never fail. Gold is no longer ahead against bad times. June 18th, 2023. Gold loses status as haven. September 20th, 2022. What he says is, triple tops almost never hold. We're hitting it, hitting it, hitting it. You can see these lows are coming up, and if we can turn here and head on higher, which I think we are, we could see a big old triple top breakout. That's going to be a big move. That is going to be your next leg higher, much like 2018 from the bottom here of 11 something all the way up to 2000. It's going to be another leg like that. We could see $1,000 increase in pricing or more on gold. We could see silver rip it, platinum rip it even more. Silver and platinum kind of rip more than gold. We could see some pretty big moves, and we could also see the gold and silver mining companies come back alive. So to be a contrarian, you have to buy when the sentiment is really crappy. And I would say that the sentiment's pretty crappy in especially the gold and silver mining companies. It's really crappy. A lot of people think that they can't go up anymore. I think at some point they could they could eventually rip it. I'm hoping that we can get that XAU to gold ratio to break that downtrend that we've been tracking on the daily technical analysis. We can break that downtrend, man. I'm going to be very bullish on it. Shabam Garg says, excess duck, so that's drilled uncompleted wells, which were responsible for a significant portion of America's oil production rebound since 2021, are now at critically low levels. With frac spread count down 5% year over year, the rigs dropping every week, all signs are pointing towards continued shale activity deceleration. That also matches what we just went over up here with the peak here. So all of the data aligns for that to potentially occur. I just ripped right past. Oh, no, it's right here. So this is the total drilled uncompleted inventory in major oil regions by well age. You can see that we've been declining this is abnormal live DUCs and operational inventory. So operational inventory, and then we've got this coming all the way back down. These are dead drilled uncompleted wells greater than 24 months. So yeah, it's declining, and you know what, guys? Maybe we are going to peak out. I don't know. We'll see. I like Logan. I like that he's kind of digging into some of these guys. He says, worst housing bubble crash ever. How will the Reddit bubble boys explain this one in 2023? So among the 100 largest markets, only one market, Austin, saw a seasonally adjusted month-over-month home price decline in May. The other 99 markets posted an increase. And this is the only decline. These are all the ones with increases. And obviously the bluer the dot, the bigger the increase. So yeah, this is a huge decline with everything increasing. I just like seeing that stuff. I'll skip over mine. This is just talking about yields going higher. I talked about that. It says, tired of all these doom and gloom getting only clickbaitfans.com. Is this beginning of wave 3, oil breaking higher, energy service OIH ripping, URNM also doing backtest things before heading higher? And again, if you want the individual companies that I'm looking at, you got to sign up, discount coupon code. So this is crude oil. We can see it's breaking out here. It's looking fantastic for hopefully the beginning of a grind on higher. We've got OIH just ripping it. It looks so good from this perspective. We've got a little bit of resistance coming through here that it's coming up into, and hopefully we can break and rip right through it. We'll see. And then URNM, we did a back test here, and it's starting to come back up. So I think URNM could even rip it. I think a lot of sectors right now in commodities look very good. I'm very bullish, very excited to see what happens over the next couple of months. This is non-aesthetic thing. So he says, yo, WTF, why the face, right? Just saw a stat that said only 30 to 50% of people have an internal dialogue. There's really 50% of the population out there walking around with nothing going on in their head. Everything is starting to make much more sense. Is that actually true, guys? Do you walk around and think nothing in your head? I actually have a lot of internal dialogue all the time. It's quite ridiculous, but I just thought that was interesting. Grady here, it says, like silver, also platinum is sitting right below the huge blue breakout line. Generational breakout incoming. Posted on platinum's potential even before called commodity bear market. Low back in April of 2020. Pioneering a platinum case here on FinTwit. So again, very bullish MACD, secular bull market for a potential second leg here. So this is the first leg, the consolidation here, and then hopefully we can get a big one. He's saying this is the first leg, second wave, first wave, second wave, and then a potential boom out of this thing. Let's hope that's the case. I'm loaded to the gills on this stuff in platinum. I am a platinum fanboy. I love platinum. It's my favorite metal. The reason it's my favorite metal is it doesn't really get milky if it gets exposed to air. It's very scratch resistant. It's very dense. It doesn't take up a lot of space in terms of value as well. That's why I really like it. You can store this stuff in a pretty small area for the value density. Go platinum. He says, thinking the supply issue is much larger than many seem to think. This plus big inflation, bonds plus stock bear, USD down, yield curve control, QE infinity, etc., will create the greatest commodities bull ever seen. Yes, it will be your best opportunity in your lifetime to get out of the rat race. I completely agree. I'm very deep into this stuff. What he is basically saying is if you have supply issues at the same time that you have credit expansion, you're going to have massive inflation. Massive inflation. You're either in this or you're going to be a victim of it in terms of inflation. I said, this is not the most joyful post, but it's vital to be aware of what's going on. I think this is likely to play out, unfortunately. Fed will probably try to save the bond market before USD, but the global leveraged debt mountain will probably take down treasuries anyway. This is a big, gigantic shoulder, head, shoulder. We could see interest rates really start to take off. Now, this would be congruent with a slowdown in the short term. So could we go up to create a shoulder, and could we go down in yields for a while? What that's going to do is it's going to kick the housing market back on. It's going to reverse and uninvert the yield curve. So this will be an uninversion of the yield curve, uninvert the yield curve, and then we go and we invert it again going back up. That is a high likelihood and a possibility. What would cause this is crap in the system needing to be flushed out from higher interest rates. It's not going to be driven by the real estate market. We still could get a recession and a slowdown, much like the tech bubble. I think that we're going to do something exactly like that. I think the tech stocks are going to peak at some point. They are going to crash. And then I think we're going to do something with interest rates for a period of time. We could lower interest rates. It's going to kick the housing market back on. And boom, boom, boom. We're back into a gigantic housing bull market. We'll see what happens and how that all plays out. But that is what it seems like could potentially play out. Something on the lines of that. Now, it doesn't mean that this shoulder has to come all the way back up there. The neckline is here. So again, we'll see how far this goes. We could just come down and limp it down, and this could barely pull back. So again, I don't know the path in the short term that it's going to take. We could have to ride through some volatility, but we'll find out. A lot of the commodity stocks look good as is. So this one's U.S. purchasing power heading into the abyss. Protect with gold and silver, platinum as well. So this is U.S. purchasing power, silver appreciation. Silver appreciates, and this is your purchasing power here, just getting ripped to the downside. What we've got, he's got these circles here of basically you've come down in a downtrend, then you've broken to the upside. Another break to the upside, another break to the upside, another potential break to the upside. I think that we can also see that these circles correlate with kind of where we're at in some of these areas as well. Kind of a buy signal, buy signal, buy signal somewhere up there. And then another buy signal here recently as we've fallen below this area. It says game over below this line heading into the abyss for U.S. purchasing power, which is going to really push silver to the upside, gold, platinum, and all these different commodities. So yeah, we got a lot of stuff going on here, guys, and that's where I'm going to end it here. If you like the content, give me a thumbs up. Don't forget to do that, please. It helps me out. Subscribe to the channel if you'd like to, or check out the website, either one. And guys, to me, everything looks good. It all looks good. If you look at the technical chart patterns, we're breaking out of falling wedges everywhere to the upside. And this is all just more data to basically pile on top of the data that we already have. And I like looking at other people's work because it's not just the work that I do and what I look at. I'd like to see other people, look at it from different perspectives, look at it from different sectors than what I do. Purchasing power, I don't really look at that often. I don't look at some of these other ones. Some people also draw their lines a little bit different when they contact some of this stuff. So a lot of good information. Twitter's pretty good at finding a bunch of pretty bright people putting together lots of information, and I like drawing my own conclusions from it. So, all right, guys, that's what we've got for today. Hopefully, you guys are doing all right, and we'll catch you later. This is Finding Value.